David, always good to have you in here. So when you hear the Fed is tapering QE3 now to nothing, you still have short-term interest rates at 0 to 0.25%. When you hear these statements that the Fed is being hawkish or some of the other Fed members being dovish, first and foremost, what does that mean?
Well, they're not birds, I can tell you that. A little lingo. Hawkish means really that the Federal Reserve Board members are concerned about a growing economy and more inclined to increase interest rates. Dovish actually means that they're a little more conservative, these Fed chairs, and are maybe not so quick to pull the trigger on rising rates. So, you know, we've had some really good economic numbers. GDP was strong, over 4%. We've had some mixed numbers, but the overall trajectory seems higher. So, you know, the economy seems to be doing well. You know, October, I've got to talk about October. October was an historically volatile month. In fact, it was one of the 6 most volatile months ever. It was the most volatile month we've had since October of 2000, which was the beginning of a bad time in the market. You had the market go from all-time highs to down 8.9%, 9.8%, back up to all-time highs. So it was really a 20% move within a 6-week period. And the actual market ended up, the Dow up 2%. So talk about a roller coaster ride. That's not very fun. The good news is that clients that I met with, especially new clients, you know, they've really got better, I guess, expectations about what to expect from their portfolios, and people are just not so thrilled about taking on risk. So I think it was a good test for people to see really where the risk tolerance is right now with their portfolios.
Well, David, you were on my radio show earlier this week, and we offered a free financial review to our listeners. Again, this is on the KCBQ show. David also hosts a radio show on KFNB 760 AM on Sunday mornings if you want to check him out there. But on the radio show, we talked about some of this volatility, what's happening with the Fed. When people are reaching out to get these free financial reviews from you, what are some of the things that you discover in a volatile market like we have right now?
That people are way too risky in their portfolios. They cannot stomach the declines they think they can until they happen. And so that's probably one of the biggest issues that I see, quite frankly. And then the other side, you have clients that are so afraid of the market from 2008, they're all in cash. So you almost have this dichotomy between, you know, the fearful and the fearless, and there needs to be kind of more of a happy median. So that's what I see, and that's why when we do the second opinions, it's very helpful because we actually create a plan for somebody so we don't have to second guess and be in and out of the market. I mean, I had a client come in last week, and they had just sold all of their positions that they had held because they were so scared of the market, and that was at a 9% correction, not 20, 30, 40, 50 that we saw in 2008.
Wow. Well, I hope that nobody runs and just sells all their portfolio off without at least talking to you first. There are a lot of things to be careful of. There's, you know, risks of inflation. You're hearing things like bond bubble, and even things that aren't risky, just how much you're paying in taxes. That can be reduced whether the market goes up or down. So it's just a smart thing to get a review from someone as experienced as David, and I hope you reach out. He offers a free book, his new book with Steve Forbes, Successonomics, and this free financial review. If you text the number right there at the bottom for a free book, David will give that to you along with a second opinion to make sure that you don't have any holes in your game. It's just a smart thing to do. People have been doing it from our radio show here on The American Dream as well. We haven't had one person reach out and say it wasn't worth it. Of course, it didn't cost them anything, but raving fans every single time. So David, appreciate you coming here, help us understand the market a little bit better. If you want to learn more about David, go to reyesplan.com, and David can help you out there. So here he is on the screen, and you can also reach out to him on his book and quite a bit more of the resources he has there, TV, radio, and much more.